We are live, Patrick.
Wonderful. Welcome, everybody. Thanks so much for joining us. Thank you, Sanjay, for keeping me on track. We are joined by some wonderful guests today. We're excited to have everybody joining us both live and via recording. We have Sean from Terrazzo, Depeche, who is with IFCA, the Unified Regulator of Gift City in India. He's the executive director. Sean is a partner at Terrazzo, and everybody knows Sanjay Vatsa, the president of Invenium International. And I am Pat O'Meara. I'm the founder and CEO of Invenium, and which means I carry Sanjay's bags wherever he tells me to go. And Invenium is an operating system for data in a decentralized environment, facilitating tokenized securities. And pre-trade, post-trade, how do we support these real-world assets becoming digitized and then trading? So that's what we're here doing. And so why don't I start? Sean, why don't you give us a quick introduction of yourself?
So hi, Patrick, Sanjay, and Dipesh bhai. Lovely to be here and be part of this. I'm Sean. I'm a partner at Terrazzo. Terrazzo is a small company based in Ahmedabad, India. We are on a mission to try and democratize access to private market investments through tokenization. And we've been on this journey for a few years and have had fantastic support from IFSCA, Dipesh bhai particularly, and now with Invenium and with introduced through Sanjay, and great to be part of this ecosystem.
Sean, it's great to have you, brother. Thanks so much. And Dipesh, give us a quick introduction of yourself.
Hi, good morning and good evening to all the viewers. Thank you, Patrick and Sean and Sanjay, for having this important discussion around how the approach is happening towards various markets in terms of the digital assets. I'm Dipesh. I'm Executive Director at the International Financial Services Center, the Unified Regulator, which is developing the International Financial Services Center in Gift City, Gandhinagar, India. And this is India's first onshore and offshore center within the onshore India, which is trying to create an enabling environment for financial players and institutions to undertake international financial services much more efficiently. I've been in Gift City since 2008, joined initially to look after how the city and the concept can be brought to life. And now we are seeing a lot of traction in terms of how the institutions are seeing this as a new emerging financial center. So it's been quite a journey, but been very fulfilling to see how a conceptual plan can, ultimately turn into a reality and being a thriving financial center now.
Fantastic. And Sanjay, thank you for joining us, and thank you for all your work you do and the time that you spend on the road in Singapore and the Middle East and India, and helping us build these partnerships and relationships. You are key to that. But talk to us about why you think specifically Gift City and Terrazzo are so important when we think about the global tokenization of real world assets, and what is, kind of frame for everybody who's sitting here the role that India may play globally, and why specifically Sean and Depeche and Gift City are kind of such great partners for the entire ecosystem who want to tokenize real world assets.
Sure. Thank you, Patrick. And I think Dipesh bhai and Sean will explain it a little bit more as they get into details. But, I go back 22, 23 years ago when India reformulated the capital markets and did DMAT, RTGS, and RTPS systems, which brought complete capital into the public markets, which is about $70 to $90 billion into India, and made India to be one of the most efficient capital markets infrastructure in the world, doing millions of transactions, not in dollar terms, but at least in volume terms. What I'm seeing is the same aspect happening on the digital asset side with Gift City, which is what Dipesh bhai said. They're a unified regulator which is forward looking, which is basically looking at how the center can help orchestrate and facilitate the momentum of India from a $1.5 trillion economy, which it was, today's 3.5 trillion to 10 trillion finally. How does it happen? And I think they believe that the aspect of digital assets is very important. Why Terrazzo is important, why we are partnering with Terrazzo, and Terrazzo is also a client of ours, is very simple. The outlook of Terrazzo is investor protection, returns to investor, and democratizing alpha. I mean, democratization, they're holding into the real estate assets. And I think they are orchestrating that. They could have done it in a very simple way, but they are in the sandbox. Why Gift City and what Dipesh and everyone else has done out there? They've created an infrastructure and environment that helps orchestrate that, facilitate that, while not giving up on investor protection and investor transparency. So I see those as the two powerful things coming together. So we are lucky to have found both the elements. Sometimes you find the regulators, sometimes you find the person, but you don't find the regulators. So we've got two things aligned to take us to the next level, Patrick.
Yeah. And as we think about private markets exploding and the growth in private markets, where there is regulatory clarity, where the good actors can be identified, they can seek regulation, they can follow the rules well, and there's interaction with the regulators that is constructive. We obviously see that, Dipesh, with you and our interactions with you, but also you just joining on this call talking about tokenization of real world assets as a mechanism to provide clarity from a regulatory standpoint within Gift City that can allow people to innovate around the monetization or financialization of these real world assets that for much of the world's economy, that wealth is locked up and illiquid, right? And this is a mechanism to monetize that. And Sean, you have a long history, right? This is not new to you. You're not getting into real estate for the first time. Tell us a little bit about Terrazzo. Tell us a little bit about your own history in the construction business and the building business, and your own businesses, and then what drove you into tokenization.
Thank you, Pat. So I've been in real estate development for over 25 years. We've had an equity-funded business model, and we've never taken debt to build our business. So we're very familiar with the concept of raising equity for projects specifically. So this business model of raising money and carrying out developments has been something that I've been working on for over 2 decades now. We've tried to, in working in this manner, we've tried to create a transparent business model, one that keeps all stakeholders in mind, whether it be our clients, whether it be our LPs, whether it be the government for that matter, when we pay our taxes. So we've tried to build a business model which is fair and equitable, and where everyone must win, and particularly our rewards as a GP are tied to the very much tied to the returns to the investor. So we try and put investors first. We want to put regulation first. We want to put transparency first. And that's the philosophy with which we are trying to build our businesses, whether it be real estate development or now the evolution of how some of these real estate developments have historically been funded through, private market investment opportunities and in small circles with people who have, put a great deal of faith in us. And I can't thank these people who allowed us to really flourish in the way we have. But now, if we want to grow beyond this point, and if we want to democratize access, I stumbled upon this concept about 3 or 4 years ago. We learned about asset tokenization, and it was very fascinating as a subject. And during much of the lockdowns of COVID-19, we started looking into this a little more seriously in terms of how we could evolve asset tokenization as a part of our strategy of growth. And while we were doing this, we were in India. It was hard to travel at that point. I was learning about or hearing about some jurisdictions globally that were somewhat more progressive or seem to be more progressive. But at the end, we are in India. We are, we're an Indian company. We want to develop in India. We don't want to do roundabout uh, offshore structures which are convoluted and become hard for people to understand and hard and somewhat compromise transparency. So when we started looking for opportunities, somebody out of the blue suggested IFSCA in Gandhinagar as a unified regulator. And while I knew it was there, it didn't strike me originally as the first option to go to. We were looking at this, the Security and Exchange Board of India. But I spontaneously, I remember I picked up the phone and I called Dipesh Bhai, who I'd known from before. And he said he was immediately receptive and said, it sounds like a good idea. Why don't you come in and meet us and show us a small presentation? So, they were also very receptive in terms of how how this played out for us. And it was just really lucky that they happened to be in our backyard, very close to us. Then when we went there, we learned about what IFSC was doing. They were keen to see what we had in mind. And I think from there, we evolved a strategy. We then, pretty much incorporated Terrazzo as a company. We thought of creating asset tokenization as a business opportunity. But we feel passionate about how we do some of these things. And we feel that we want to really do them well. We wanted a transparency and regulation first approach. So we didn't want to compromise some of those things. I've seen many people trying to, we see, companies in other jurisdictions only trying to avoid regulators. Here, we are fortunate to find an opportunity where the regulators were just as receptive to innovation as we were to, create something new.
Sean,
so that's how.
Oh, I'm sorry.
Go ahead. No, go ahead.
I think that's a great point, and I want to make two comments real quick, and then I'm going to go to Dipesh. Number one, your as somebody who's been and visited buildings that you've built, that you own, that you occupy, but then also your other businesses, right? You own some restaurant businesses, et cetera, and there's a very famous picture of Tim Cook trying his Indian food in your restaurant, and how you run your businesses. I think everybody will see it's obvious that your intelligence who's on this call, but I can also say your diligence and the types of businesses you built are amazing. And it's one of the reasons we wanted to partner with you. And I'm going to use that as kind of a softball to you, Dipesh, as you got that phone call from Sean, and he said he wanted to partner with IFSCA, and he wanted to work with you as a regulator and understand how he could bring this technology and actually go live with tokenizing real estate assets. Talk to us about that dynamic, not only about why you said yes to Terrazzo, but how you're thinking about this new technology coming to India.
Thanks. I think, Patrick, for this, let me just quickly give you, why the International Financial Services Center got set up in India. At the first instance, we have seen over a period of time, many years, when the financial centers across globe were trying to generate business for India. And what we were trying to see is that you will have centers like Singapore, Dubai, Mauritius, many other, Labuan. They're all trying to create a financial center. But what was really, eye-catching for us was that they were all creating businesses, structures for Indian businesses or entrepreneurs to come in their financial center to do India business. Now, sitting in India, if you have to figure out that most of the Indian businesses which wants to do international financial services are trying to locate themselves outside India to do India business, then obviously fundamentally there is something which is probably not in place, or you need to figure out what the problem is. And fortunately, I think for the government of India, a very forward thought process came in that can we fast forward the development of the International Financial Services Center in India. And this was, if I give you some historical data, this was conceptualized by none other than the Honorable Prime Minister of India when he was the Chief Minister of the state, and he was puzzled by his visit to Singapore and other places where he met so many entrepreneurs, and when his first question to all of them was, "What are you doing here in Singapore?" And the answer came back to him was, "Sir, we do India business sitting in Singapore." And this was a puzzle in his mind, that why you have to be in Singapore to do India business. I think probably somewhere most of them came up with two things. One was the foreign exchange management regulation or the law, and the tax laws. I think these were the two fundamental structures which people were finding it difficult to navigate to do international financial services business in India. So it was becoming much more simpler and easier to be in those financial centers to do India business. I think I do remember when he came back, I think one line mandate was, can you create something which is better than what probably some of the fine centers outside India are doing? Can you create a financial center with a good environment in terms of infrastructure and regulation? Little we knew about the creating of a financial center at that time, because we just started as a concept. But what came out more strongly was the India, which was at that time contributing around 5% in the financial services GDP, was slated to contribute 15 to 20% into the India's financial services contribution to the GDP. Now, to bridge that gap, you needed close to probably 800 million square feet with 700,000 jobs to be created in whole of India. Now, this was the data point on which we were sitting at that time when the gift was getting conceptualized. And we said, look, if we can make an attempt of creating probably a structured or a full, planned financial center, it can actually help India to bring in onshore the offshore financial services. And with that objective, probably the gift got into existence. It started, taking some smaller steps, and probably, as Shan rightly said, that he never noticed on his backyard what is happening. Many of the players like him never noticed what is happening in the gift, because it was, always considered that something is happening there, but it may not be for us to participate in a bigger opportunity. But I think what was important at that point of time was the hinterland demand of India. And as Shan just mentioned about how the huge India demand is getting generated, but not having a structure within India, you were compelled to structure this outside. Now, sorry for the long answer to what you asked me, but probably this may help the viewers to understand that, look, India needed a financial center which is outside the domestic law to do international financial services. And that's how the International Financial Services Center got operationalized as an offshore zone within onshore India. Because as a country, we are not full capital account convertible. So we needed a structure onshore which can help offshore financial services to come and operate within the onshore India. With this structuring in place, I think what we have done, what the government of India has done now is, it created a separate unified regulator combining the powers of the central bank, the insurance regulator, the pension and the securities regulator into one unified regulator, which is responsible for the International Financial Services Center to develop and achieve its full potential. With that, once we came into existence, and probably you might be surprised to see not many of the regulators who will come on a webinar like this to speak about what is happening on the digital side, because it's still, the whole thing is evolving in its real structure. But we as a a new unified regulator, and we are just what you call a startup regulator in a way. We are just 3 years old. When we started on 1st October 2020, combining all these powers. We realized, immediately in few months after we started implementing the financial authority here, that if we don't build the culture of innovation within the financial regulatory body, then we will always be like, following somebody else of what has been done globally. And we have seen examples like bullion trading. For example, the gold is the one of the highest probably consumed product in India, but the prices for that are set outside India, because India never had a bullion exchange where you can discover the pricing. Now, in so many segments, we were becoming more like a price taker rather than influencing ourselves by participating in those opportunities. And when we came into existence, we said, look, we were to build this authority, then the culture of innovation has to be the core component of how we are going to build. And probably that's why we were ready to put our neck out when Shan called me and we said, okay, I think we have nothing to lose as a new unified regulator. We would certainly like to explore what type of new structures the global players are trying to build on.
And I think as what you just laid out, the willingness to lead and innovate and grapple with new technologies, with partners who seek clarity, who seek to operate on the right side of the law and the right side of regulation, and deliver innovation for the benefit of all of India and then globally. So our experience is the same of being received well, the legal framework that's understandable, and the FX where everything is dollar denominated, is a huge benefit. It's a huge benefit for us seeking to do business, but it's also a huge benefit for non-resident Indians, right? That they can come in and they can invest dollars through Gift City into projects inside India. It's a huge opportunity. And so you guys have become an overnight success 15 to 18 years in, right? And I think that's always the state, right? You work for 15 years, 18 years, and the next thing you know, you're an overnight success. But you've had massive inflows of corporations into Gift City just even very recently. Is that right?
Yes.
Absolutely. I think what probably I think as I posed the problem statement, that what was the problem? The problem was the regulation and the tax clarity. The businesses never thought that they want to just operate in a tax-free zone. They never thought that. They always wanted a clarity on the regulation and the tax side, so that there are no surprises as they move forward. If we provide them, and that's what as a new regulator of a smaller zone, we could realize that although the strength of India is huge, but if the financial center in which we are operating this authority, if we can bring in the regulation which are benchmarked with the international best practices, and we give the clarity in terms of the businesses challenges that are posed to them, if we combine this together and give it on a structure to the entrepreneurs, you will certainly find takers to come forward and figure out that, look, while I understand that everything in the tokenization is not clear today, but can I come and experiment? The moment I start experimenting, I start understanding the challenges. We also, as a regulator, as I said, we are learning. It's a learning curve for, I'm sure even the established regulators feel the same sentiment when it comes to the newer asset classes. Everybody is in the learning curve. But if you are not open to this culture of allowing the innovation, then probably you will always be the follower of all the global markets are doing. And to a size of India with 1.4 billion people as we are, and the type of the opportunity that India today provides to the global market, we cannot be seen as just a follower. We just want to make sure that we are seen as a serious contender to ensure that the innovation is given the right environment. Whether it succeeds, it sees the light of the day, it goes through a learning curve. We are ready to pass that journey with the innovators and see as to how this can evolve in a much structured environment.
And Sanjay, let me throw that to you, both to respond to both Sean and Dipesh, but I'd also like to just give you a question. And Sanjay has a history of just saying what he wants, not answering the questions I give him on these webinars. But Sanjay, what I'd really like to talk to you about is, as we see this explosion of new businesses and startups in India and innovation and people desiring to be the primary agent of change in their own life, right? And we're really seeing this explosion in alternatives, in startups in India. how important is Gift City? How important is blockchain? How important is it that blockchain and the ability to provide transparency on data and performance to allow people to invest? Talk to us a little bit about all of these environmental conditions that are making this a great place to be. Sanjay, I'm sorry for.
No, perfect. So I think Dipesh Bhai talked about regulation, being a regulator and innovation in the same sentence, which is very rare to hear that. Number one. Number two, so that's the first aspect of environment that is being set in place. So the discovery mode is open mode. I think we talked to Dipesh Bhai along with Sean on the digital asset exchange. Make an application, we'll go through the process. Didn't say, oh, we don't do this, come back after 1 year, right? Make an application, we'll go through this. So that's the first thing, is the willingness to look at it, the willingness to consider it, and the willingness to look at it from a perspective that investors are protected and transparency is maintained, number one. Number two is the aspect relating to the sandbox that they have created, the sandbox environment that they've created, and the free passporting with Monetary Authority of Singapore, ADGM, DIFC, and Luxembourg, and a couple of others. They've created a formulation around it, and they're taking the best practices of others, but they're also modifying it with the best practices, what suits India. The third is the environment is set, because if you really look at Gift City, it's for non-residents, not only for non-resident Indians. The yields are high. The yields are 17 to 20%. Even for road assets or infrastructure assets, it's 14 to 16%, which are higher yields. So if you really look at the element of the environment of returns, if you can tokenize and you can allow fractionalization where small people can come in and invest $100,000, $50,000, or over time it will come into the mainland India, 20 rupees, 100 rupees, or 200 rupees, that in itself will give them that you are really democratizing alpha, and you're creating financial inclusivity. That is what you're doing. Sorry.
And that democratizing alpha phrase is great, because seeking alpha and finding that, when you have an economy of 1.4 billion, and that economy of 1.4 billion is growing at a rapid rate. I mean, just explosive growth, where we have an enormous. I was at this AIF dinner in New York a couple weeks ago, and I sat with a whole bunch of people, and Chandra from Tata spoke, and Brian Moynihan was a speaker, and he was talking about how the lifting up from an education, economic self-sustaining, and the growth of this massive population base, that economy is growing at scale. And how do people invest into India? How do they invest into India to participate in that, to finance that, to fund some of the infrastructure growth and get that benefit where there's clarity of law, clarity on the FX, Dipesh, as you said, but and come into this. And this democratizing of alpha, Sean, this is what Terrazzo is doing, right? What you want to do is not just build one building at a time with 8 to 10 investors. You want to be able to scale where you have lots of different people investing into this asset. They not only have a mechanism to get in on a primary basis, but have third parties like Cushman & Wakefield valuing the underlying asset. The investors have real-time visibility into the business. And there's also secondary markets where they can get out of it. But also, if they've got equity, how do we attach a MasterCard connecting with a bank so that they can have some, piece of that they can be, buying their latte, off of, that's going to settle up at month end against that real asset. And we say we're going to democratize this alpha. We're going to get significant scale and distribution, and that's why you're driving. How big? You guys are the first tokenized real estate asset in India, in the regulatory sandbox. Is this the first? Is it going to be the first and only? Is it going to be the first of many? What are the other assets that are going to come? What is your kind of prognostication around digital assets in India, and both from a demand, and we clearly see that you have support, where the ability to get a clear answer so that you can innovate, right, in partnership. Boy, that's a wonderful environment. Yeah. What's going to yield? What's going to come out of this?
No, so I think you're absolutely right. I think India everybody sees India as the next big global opportunity, and it's a shame. It would be a shame if we don't make it convenient for people to participate. And I think that's what Gift City was primary function, was to see how can we create a bridge between the world and India, and create an efficient bridge that allows moderated, careful participation by the good actors. And it'll be a two-way bridge, Pat. It'll be allow Indians to explore the world, and it'll allow the world to explore India. So I think this bridge enables us to get going. That's the beginning. But I think we are fortunate to be one of the early movers in this field. I know many people are trying and doing a great job globally. This is a growing business. Asset tokenization, the concept, it seems like a new concept, and it is because it's on the blockchain. But fractional ownership in different forms have existed for as long as we know. This just becomes a more efficient way of doing it. It's a more transparent way of doing it. It allows you to do this in a way that is safe for investors, and I think that's what that's the innovation that tokenization brings. You can have a cap table with investors all over the world. You can settle up immediately. You can, it allows you to work with KYC, AML, all the components you need for a safe and secure environment. And I think that's the advantage of tokenization. It will allow us to democratize access. It will allow other people to also do this. So we see this as a huge opportunity globally, as do many other people, and a lot of other great companies are taking steps in this direction. I think the lack of global clarity on regulation is a big hindrance today. So we feel very fortunate to be in an environment that fosters innovation without compromising, basic investor safety and all the other regulatory provisions. But we see
this is. I want to hit that one point real quick because it's so big, and I'm going to come right back to you. Your point about the ability to have regulatory clarity, where we're doing something that's been done for hundreds and hundreds and hundreds of years, if not longer, right? Yeah. Fractionalizing participation. And, one of my favorite lines, the London Stock Exchange says, they've been dematerializing and trading assets for hundreds of years, which is absolutely true. What we're doing, though, is we're moving from, and I'm going to use kind of a very simple analogy, right? A Sears Roebuck's catalog, right? You remember when we all used to get a catalog and we'd flip through it as a kid, and then you cut it out and you send a check in the mail, and then 6 weeks later that comes. The internet to retail brought instantaneous global access to a diversity of product, right? And it allowed people to compete in new ways. Right now with real estate assets, when you want to get liquidity on your real estate asset, you have to sell a huge chunk or the whole building, right? Yeah. And what that means is because your money's locked up, you put less into it. But when you have secondary liquidity, the ability for somebody to invest more into it is meaningful. And we all know India is going to create huge returns for investors. The question is, who's going to get it? Is it going to get KKR and Apollo and Blackstone, entirely, and that's going to go into CalPERS and CalSTRS and Texas Teachers, which are great? Or are individuals going to be able to participate who are not in that system, and are they going to be able to invest in that? And I think what I want to talk about is, you talked about democratization, you talked about the good actors having the transparency. I want you to talk not just about the statements, but I'm pushing you to make a forward-looking statement. What is this going to look like in 3 years? What is it going to look like in 5 years? What are the outcomes that we're going to see from the tokenization that you've done now once, and that we're now going to see stamped out more?
So I'll start by saying that I think tokenization is going to become mainstream. I think it has the potential to do that, because it kind of really addresses most of the issues related to good regulation and compliance. So I think that in itself is a very fundamental building block for something that has the potential to grow. If it can be well regulated, if you can ensure compliance, which we very much are looking to do, and make sure that good actors come in, they play on a fair and level playing field, and then can compete in that way, is the way that we can see a lot of growth. I think most fund pooling that happens in other forms today, which are relatively less efficient, could move to tokenization as a more efficient means of participation for investors, whether they're large institutional investors or they are more accredited investors, individual investors. And then over a period of time, it will move into retail investors. I think we are in the early days, and it's good that regulators and good actors make sure that this is a controlled experiment at this point in time, and it doesn't have consequences to people that cannot understand or deal with the consequences of an investment of this nature. But I think there'll be different products with different risk levels, with different kinds of minimums that people can go with. But I think I see real estate as being a huge benefactor of this technology. I see private equity funds, all kinds of funds which are typically close-ended, have the same kind of issues as real estate, where you need large amounts of capital. You are making multiple investments. You can't time exactly the exit from those investments with the timeline of your fund. Typically, investors need liquidity, so funds are required to give redemptions, sell their assets at untimely moments in when it's not really the right time. So I think if we can address those issues, and I think asset tokenization really has the potential to address all those issues, that's where you'll see real inclusivity and so many more people participating.
And I think as we think about this, Dipesh, and we talk about more people coming in, you have an advantage as a new regulator. And in some mature markets, sometimes the regulators tend to protect the incumbents, right? It's very hard for a new startup to get going, or a new technology to latch on, unless the incumbents embrace it, which slows innovation. If there's not real principles-based regulation. And you are creating a level playing ground for everybody to come in, right? Whether they're an incumbent or a new person, and get started, and you're applying and working with them equally. Talk a little bit about you're building this one brick at a time, starting with the foundation, right? What are the foundations in Gift City and the regulatory sandbox? What are the guide rails that you're seeking to set for this innovation to move forward quickly?
Yeah, let me just probably, as Sanjay was throwing some investment numbers, I'm just prompted to, being a regulator, put a disclaimer that investments are always subject to market risk, so that this should not be misunderstood. The investment numbers and the percentage which are being shared on the webinar. But I think on a more serious note, this is as Shan rightly said, this is an experiment on a sandbox. Now, the fintech framework which we brought in was with the three avenues for entrepreneurs to come forward. One, which are obviously the assets which we are talking globally is still not tested, which has not gone into a mainstream regulations, and which are not available on the markets for everyone to explore. That can all come in the sandbox and experiment in the way that, can this become a successful model? Can it pass the sandbox from 360-degree, and can it come into a regulatory enablement once it passes successfully from the sandbox? Today, as we speak, even we are not sure as to how the whole thing will move from a sandbox to the commercial and to the end game that the entrepreneurs are planning. But at least what we are certain is that being a unified regulator, regulator, allowing an entrepreneur to come and see in a sandbox as to how his product or how his innovation is trying being tested from all corners, whether it is a banking, whether it is insurance, whether it is securities market. If you can test in a unified environment with all the plugins of different regulations, then the entrepreneurs feel much more confident on his innovation and is able to come that more confident outside, saying that look, I could test, which otherwise I would have to go to a separate regulators asking for a separate sandbox. Now having an advantage of a unified is you are able to see from all the sides, and we as a regulator are also able to measure the problems that are coming from on the different regulations for this to be become like a commercial activity. But as we said, this is a sandbox experiment. If we have much, which if we have a bit of a mature innovation, it can also come in our limited authorization, that someone can come and ask for a limited authorization where you can test that product. So for example, we did unsponsored depository receipts on the foreign stock like Google, Apple, Netflix, all you can purchase on the international exchange on our platform. Now we have to brought that under a limited authorization, saying that if it exceeds number of accounts at 10,000 in number, then you need to come back to us that please, I have tested in 10,000 commercial transactions accounts and I am running successfully. And then you can then allow him to go to a regular type of an environment where he opens up for each and everyone to come in. But being a new regulator and being this new assets that we are dealing in, I think everyone, not only us, but probably everybody will go in a very gradual manner to make sure that there are no accidents as we move forward, and there are no unforeseen regulatory challenges posed by the investors from where they are investing or the markets in which you are investing these products for. So that has been always made that we try to see a phase-wise approach, ensure that one product at a time, ensure that we are able to give the entrepreneur the right comfort in terms of where he's moving. But we are cautious in the whole approach. It's not that we want to be very aggressive when it comes to the digital assets. We just want to see how it can successfully come out of a sandbox and become a mainstream regulatory business to operate from. So this is the approach we're adopted.
And that's so fantastic. And the reason it's fantastic is nothing is created fully developed, right? The iPhone, I'm a Samsung user, but whatever it is, the iPhone 15 was not possible unless you had the 1, the 2, the 3, the 4, the 5, the 6, right? And you go all the way back. I go to George Boole, who created Boolean algebra, right? And in the first treatise where he was talking about going into pure symbolic logic that led to the basis for all computers, all semiconductor chips. He was argued that the removal of natural language was bad for kids to learn, right? And he did the first treatise and then his second big treatise, on the laws of thought. As he built that, Boolean algebra didn't develop, but he was fought each step of the way. Now, as we're talking about technology in the financial services, we have to iterate, right? We have to iterate, but we need to iterate with a partner. Otherwise, the only person who can iterate is somebody who is a giant. And because they're the only ones who have the financial wherewithal to iterate internally before they actually go to the public. Does that make sense? And so this ability of you to iterate and work with people is so important for that entrepreneurial ecosystem that we're developing. And Sanjay, talk to us a little bit more about this, right? When we think about this environment and developing an ecosystem in India and working with innovators like Sean and regulators like Dipesh, where are we going to go and where's India going to go?
So I think, and Dipesh, thanks for caveating my comments, but the yields in India are much higher than anywhere else in the world. So I'll leave that right there. So, but maybe that's a better statement to make. So I think I'll give some raw numbers. Prime Minister Modi had come to Washington, D.C. 2.5-3 weeks ago. Google has decided to invest $10 billion, if I'm not mistaken, into the GIFT City. And there are various such announcements made. India's got 400 to 600 million Indians who have got disposable cash, who middle class so-called, who are willing to invest into private assets. They're hungry for investments. They can go into the stock market, but stock market. They want to go private asset. USISPF issued a report 2 years ago saying India's digital asset economy is a $1 trillion economy. I think it's more like $2 to $3 trillion. That's my perspective. For us, and when you have ministers making statements like Gadkari and saying, I want every Indian to be able to hold an infrastructure asset like a road asset, which is yielding something, that results in tokenization, that results in wider adoption and everything. So I think India is going to be the test bed. What Gift City is doing is, I mean, we look back 3 years, what Bajpai did to India for capital markets, SEBI chairman, in 2000, 2001, is why Indian capital market is flourishing today. I think what Gift City is doing today will be the cornerstone for digital assets, but it's not going to take 22 years. I think this is happening in the next 2-3 years. For India to be a $10 trillion economy, 30% of that economy growth, or 40%, will come from digital assets because money is trapped in private assets. And then you've got 400 to 600 million Indians or a population who are willing to invest 100 rupees, 200 rupees, 300 rupees into the various assets and get 5, 10, 15, 20% returns, right? Right now, they don't have an outlet. And the digital ecosystem that has been built in India on payments, on connecting to the last mile Indian through digitization will allow adoption to happen very fast because you don't have to build those rails anymore. So I think when you look at all these elements, there's going to be pressure for digital assets to grow, and Gift City paving the cut paths on it. There are already people trying to, Hedera is already working with India to create a tokenization platform out of Gift City. There are some road assets which are looking at tokenization, but they're looking at how do I provide valuation. So there are already people talking on this, and India has invested significant amount of money in road assets and infrastructure. All overseas investors have invested into it. Maybe they'll get converted into tokens that they can exit on. Do not know the answer, but I think all the dots are set. They're getting connected, with Gift City being in the middle, connecting them, and then allowing it to flourish. And I'm not speaking for Dipesh Bhai, but I just want you to reflect that this is a very powerful thing for this to be not only the dots to exist, but to be connected and to be activated.
We were last week helping. First, I want to just, anybody who has questions, we're going to answer questions from LinkedIn. Go ahead and put them in the chat, and we'll come back to you. Rich, thanks for making that comment. So I'd encourage any questions you have for the last 13 minutes. But I was working with a GCC country with their regulator, and they are formulating their thoughts around digital assets, and they were coming up with frameworks on how do we think about what the token is, using a legal structure for that token, how they were going to move forward with it, and understanding the token as a digital representation of a legal instrument that interfaces with the courts of law, that are fully understood, that you've got a corpus of law around it that works, and helping them do that. And we see people, and I don't care whether we're talking about Singapore or Dubai and Abu Dhabi and DIFC and all of these various different Abu Dhabi global markets, what we see in England and the UK. We're seeing a lot of Gibraltar has some really great regulatory clarity. We're seeing a lot of people saying, okay, we're going to provide opportunities for innovators to do this, and that the global economy is going to move into these new leaders, people who are willing to lead. Now, Dipesh, you guys have created some partnerships with a number of these entities, right? Talk to us a little bit about what those partnerships mean. What is that in fact? And as each of them begin developing their own frameworks, how does that impact you and your ability, your willingness to work with these various people, and then you as a regulator, as a unified regulator, the ability to provide Gift City as an innovation hub?
So you mean to say the partnership with the other regulators? Is that what your question is?
Yes.
Okay, so I think what we've done was because being a new regulator, it's always important that you come in direct connect with the global regulators counterparts. And when we started operating, the first thing that we did was, become the member of the ISCO, IIS. So we are now a member of the global regulatory bodies. And parallelly, we also started having a separate MOU with the financial regulators globally. So now we have a formal MOU with the Monetary Authority of Singapore, with Luxembourg, Dubai, Abu Dhabi, Sweden, and quite a number of others which are in process of being signed off. Now, this gives us a good platform.
This list, by the way, for everybody who's listening, that list is the Digital Assets Innovators list, right? Just so you know. Dipesh, sorry to interrupt. Keep going.
So this list is the where we have signed a cooperation where we will do an MOU and understand each other's regulatory regimes. But I think what is important out of that MOU, what we have signed, one is with the Monetary Authority of Singapore, where we have done one step further and signed a fintech bridge, which means that an innovator which is coming for into a gift city, and which Shan was mentioning earlier, like a gateway, inbound and outbound gateway. If an innovator comes here and he also wants to innovate outside or into the Monetary Authority of Singapore sandbox, he can be onboarded under the fintech bridge that we have signed with the Monetary Authority of Singapore. And likewise, someone coming to their sandbox can come in my sandbox under the fintech bridge. Now, this was important from the perspective that India being the large market and the large number of unicorns coming from India, the Indian innovation is at its peak right now as we see. I think the official data of the DPIIT, which is the official Department of Policy on the IT, that number is 99,000 plus innovators or the startups which have been signed up on their platform. Now, you can imagine with that size of the startups and innovators coming in, we always needed a connect with the other global regulators, which from both perspective, even from their perspective, lot many institutions wants to explore India market, and the gift becomes a natural choice because you are not getting into a domestic regulators even before you don't know what to do. So you are experimenting in a regulatory environment where you feel comfortable. It's a dollar zone, it's an offshore zone. You are not bouncing into the direct domestic regulatory environment, which obviously can throw up a lot of regulatory challenges of being applied all the regulations on the startup. Now, this has probably given us an edge. Now we have close to 45 fintech firms registered on our platform, and these are from 17 different countries which have come and registered with us. So you can imagine the type of the response that we are getting for the innovators to come and experiment in our sandbox. And at the same time, we have seen more than 500 financial services authorization now within the financial center itself. So a large number of banks, funds, insurance companies, the capital market entities, they all are trying to come in the sandbox, in the regulatory environment with the direct authorizations and direct licenses here.
That's so wonderful. It's so good to A, have you on this call, but B, interfacing with us and these other regulatories as entities as a mechanism, and that fintech bridge with MAS is so fantastic, especially for an American firm, that we can see, okay, if we go set up in Gift City, we know that we can have access to other Asian markets, from a base and a headquarters where you are in Gift City. That's so fantastic. Sean, talk to us about where digital assets are going to be in the next 3 years, next 5 years in India. What does that mean for Terrazzo, and what is your vision for who Terrazzo will be?
So I think we would like to become a trusted platform where I think curated digital assets are available. We want to deal with really high quality assets. So we also want to curate those assets. We see ourselves as becoming a platform for curated high quality assets. I think that's what will help us build trust and grow. So we don't want to, with like all sort of new opportunities, there's a lot of good, but there's a whole lot more bad that comes with it. So at this point in time, we want to see that we work with good actors. We want to bring really high quality asset managers on board our platform. We want to create more funds. We want to tokenize assets such as real estate, private equity, and then there'll be more niche areas like it could be fine art, for example. There could be any other collectible, whatever people feel passionate about. But as long as we create a good framework to ensure that good actors come onto our platform, there is trust and transparency in one, the asset managers that come on, and then the underlying assets. And that's where I think our partnership with Invenium becomes so important, that there is so hard to really see through an investment in detail. Most investors don't have the bandwidth to look into this, and so making data available in a trusted with a trusted mechanism and in a summarized format that individual investors, even seasoned investors, can go through to be able to make an informed decision is going to be a key kind of factor that brings more inclusivity. And if people feel that they're in a safe environment, that's what will encourage them to participate in these kind of digital assets. So I see a huge potential. We want to be one of the key players in this. I think there'll be a lot of other people who will be doing this, and we would love to see the industry grow. So we feel very positive about all the steps that the regulators are taking, that we see other high quality firms globally taking strides in the right direction. In some cases they're good companies, but they don't have the regulatory clarity. I feel so fortunate that we have at least that covered, where we are not trying to skirt regulation, but we're trying to work with the regulators to create a safe environment for people to participate in.
Sean, thank you, brother. Sanjay, I'm going to give you kind of the last word as we end up our time here. Talk to me about unlocking wealth trapped in illiquid assets. What will that do to an economy? How does that allow broader participation, democratization of alpha, but also the redeployment into new assets? What is this going to do?
So thank you, Pat, and thank you, Sean, and thank you, Dipesh Bhai, for participating. This is really impressive, and for a regulator to come on to the webinar is also very impressive, right? Thank you for doing that, and thank you for Sean for orchestrating this all for us. But I think here's the point. I'll start with data. I think India will be a $10 trillion economy. The next 10 years is India's, and it'll be a $10 trillion economy, if not more. Majority of the growth will come from digital assets, which will be about 2 to 3 trillion. There is a stated goal of India, and Thai is working on it, is to have 10 million entrepreneurs in India by 2027, 2028, right? That's a huge goal. I think, Dipesh Bhai, you mentioned 99,000 or 100,000. That goal is to be, that's a challenge to make it 10 million. For that to happen, it's not going to come from the main cities, from people like Sean and everyone. It's going to come from the wider community of India, right? From the villages, from everywhere else. To orchestrate that and facilitate that, that will allow unfreezing of asset, liquidity in private assets. A lot of assets, a lot of money is trapped in land banks, in private assets, in private equity, private debt, all those kind of things. Those all will start getting unlocked as that aspect of it get financial inclusivity. So what is happening in Gift City is going to transport into India. Whether it happens in 6 months, 12 months, 18 months, 24 months, it's going to happen. I don't think it's more than 24 months. That will open up 400, 600 million Indians who can invest into alpha generating assets. Once they invest into that money will further circulate into entrepreneurship and other things. So the full economy will lift beyond that because the money supply will go up. Sorry, Patty, we're going to say something.
Well, Sanjay, you and I are going to be back in India. We want to. One of the primary reasons, Sean, is to go back to your restaurant and eat again, but also to partner and be with all of you and participate in this amazing opportunity in India. Dipesh, do you have any final comments that you'd like to make, or even disclaimers as we end our hour here?
No, I think say any new venture or any new innovation is possible only when the top, which is the chairman of the authority and the regulatory team involved in the process, are all on the same page. I think a lot of credit to the regulatory team at the IFFC authority to able to discuss with the entrepreneurs, understand their problems, and try to onboard them and give them a way forward as to how they can become a commercial entity. So I think it's a collective efforts of everyone at the IFFCA, but at the same time, the strength that India today derives on its population and the business, I think we definitely see a lot of opportunities for the international financial services to grow at the International Financial Services Center here, and more businesses along with a lot of new structures would come, and we will keep trying to update ourselves with the new learnings, with the new innovations, and try to give them a platform which helps them to grow in the structures that they are trying to evolve globally.
We look forward to seeing you guys soon in person, and thank you for your time with us.
Thank you.
Thank you.
Thank you
Thank
very
you. Bye-bye.